and welcome to our news video. Subscribe to our channel and share your comments so that you don't miss any important news. The Cryptocurrency News End channel does not recommend any offers to buy, sell, invest, etc. in the cryptocurrency market in any way, and any losses and other consequences are your responsibility. Our channel only follows the news of the cryptocurrency market and does not provide you with any advice on making transactions. Please enter into transactions in the market with your own analysis. Bitcoin's next parabolic surge? M2 money supply signals a massive rally ahead. Bitcoin enters generational buying zone, but will the crash get worse? Bitcoin whales moved $2.3 billion in BTC as price crashes to 3-month low. Is the worst yet to come? Crypto market faces tactical retreat, not a reversal, says Binance CEO. Bybit CEO declares war against Lazarus after $1.4 billion hack. Bitcoin's next parabolic surge? M2 money supply signals a massive rally ahead. Warning: the U.S. money supply explosion could ignite a Bitcoin supercycle. Are you ready? Bitcoin investors are on high alert as the global M2 money supply surges, setting the stage for a potentially parabolic rally. But should traders go all in now, or is another correction looming? M2 money supply and Bitcoin, a deadly combination? According to Pav Hundal, lead analyst at SWYFTX, the current market conditions suggest a major Bitcoin breakout, but he warns that traders should not risk everything on a quick move. This isn't a market to bet your whole stash on a quick correction, but our central scenario is still for a strong March and beyond, Hundal told Cointelegraph. Historically, whenever the M2 money supply expands, Bitcoin has followed suit, benefiting from increased liquidity and lower interest rates. According to Macromicro data, the year-on-year fixed exchange rate for M2 money supply across major central banks hit 3.65% in January, signaling strong bullish momentum. Economists and analysts sound the alarm. Renowned economist Lynn Alden noted in a September report that Bitcoin moves in sync with global M2 liquidity 83% of the time. This alarming correlation suggests that the current money supply expansion could send Bitcoin soaring. Crypto analyst Bitcoinita21 added fuel to the speculation in a February 25th post on X. With weakness in the dollar causing a net positive effect on global M2, it's just a matter of time before Bitcoin realizes. Similarly, Colin Talks Crypto echoed the warning. The global M2 money supply predicts a big move is coming for Bitcoin. Bitcoin price crashed before the boom. Despite the bullish macro signals, Bitcoin briefly plunged below $90,000 on February 25th, its lowest level since November. The drop followed Donald Trump's confirmation that his planned 25% tariffs on Canada and Mexico are moving forward on schedule. This policy shift rattled global markets, adding to short-term volatility in the crypto space. Investment firm Bravo Research issued a stark warning, revealing that the U.S. money supply has doubled in just 10 years and predicting that this liquidity surge could fuel Bitcoin's parabolic run-up. With macro indicators flashing bullish but geopolitical risks growing, the question remains: is Bitcoin's parabolic rally imminent? Or will another major correction shake the market first? Bitcoin enters generational buying zone, but will the crash get worse? Bitcoin's free fall raises alarms as analysts debate whether the worst is yet to come. A key Bitcoin price indicator is flashing a generational buying opportunity, but with macroeconomic fears mounting, Is this truly the dip to buy, or is more pain ahead? Bitcoin plummets to 3-month lows. Is the nightmare just beginning? Bitcoin, BTC, crashed to $86,050 on February 25th, marking its lowest point in 3 months. This dramatic plunge has left traders in panic mode, fearing further downside amid rising inflation, economic instability, and global uncertainty. Analysts cite 3 major factors behind the crash. U.S. equities are bleeding, fueling fears of an extended bear market. Consumer confidence is plunging, with the Conference Board's index dropping to 98.3, the largest decline since August 2021. Trump's aggressive tariffs on Canada and Mexico have intensified market jitters, pushing investors toward a risk-off strategy. Are traders blind to a massive Bitcoin buying opportunity? While $1.59 billion in crypto liquidations have sent shockwaves through the market, some top analysts insist that this dip is a golden opportunity for long-term investors. According to historical trends, Bitcoin's Relative Strength Index, RSI, has plunged below 27, a level unseen since August 5, 2024. When BTC tumbled to $49,000. Every previous occurrence of this has marked a major bottom. Analysts urge investors, zoom out and stay patient. Despite the current market turmoil, many experts remain unshaken, insisting that Bitcoin's post-halving rally is far from over. Bitwise European research head, Andre Dragish, believes the real bull run hasn't even started yet, referencing historical post-halving trends. Veteran Bitcoin analyst Tour Demeester highlights institutional adoption skyrocketing, with public companies accumulating record BTC holdings. With fear gripping the market, the big question remains. Is Bitcoin at the perfect buy zone, or will the bloodbath continue? Bitcoin whales moved $2.3 billion in BTC as price crashes to 3-month low. Is the worst yet to come? Bitcoin's collapse sparks whale activity, but is it a trap or a bottom? Bitcoin, BTC, has plunged to $86,000, hitting a 3-month low, triggering panic across the market. However, whale accumulation suggests that some investors are preparing for a potential rebound. Could this signal a turning point, or is a deeper crash inevitable? Bitcoin whales moved 26,430 BTC amidst market carnage. As nearly $2 billion in liquidations hit the crypto market, BTC whales quietly moved 26,430 BTC into accumulation addresses on February 24th, according to CryptoQuant. These transactions, valued at over $2.3 billion, typically indicate over-the-counter (OTC) deals and long-term holdings, raising speculation that smart money may be buying the dip. But is this accumulation a sign of confidence, or are whales merely trapping retail traders before another plunge? Bitcoin's structural breakdown. More pain ahead? After weeks of defending key market levels, Bitcoin finally lost its long-term market structure, a move that could extend for weeks. Bitcoin's drawdown is the worst since August 2024, with a nearly 20% drop this quarter, according to researcher Axel Adler Jr. Short-term holders are dumping at a loss, moving 27,500 BTC in just 24 hours. A confirmed double-top pattern suggests a deeper drop to $76,000 to $78,000, aligning with previous liquidity gaps. Bitcoin's next levels: rebound or final collapse? Bitcoin's daily candle closed below $92,000 on February 24th, confirming the bearish structure. Now, analysts predict 2 key support levels to watch. $85,000 to $81,000 zone. A fair value gap left open since November 2024 suggests Bitcoin could find buyers here. $77,000 CME gap. If BTC fails to hold $81,000, expect a drop to $77,000, where the double top pattern's full breakdown target lies. Crypto trader CRG highlights a massive cluster of spot bids between $84,000 to $86,000 on Binance, adding to the potential dead cat bounce scenario. Will Bitcoin recover, or are we headed to $76,000? Crypto market faces tactical retreat, not a reversal, says Binance CEO. Binance CEO Richard Ting predicts crypto resilience amid market turbulence. The cryptocurrency market has experienced another sharp decline, triggered by macroeconomic uncertainty, but Binance CEO Richard Ting reassures investors that this is a temporary setback rather than a fundamental reversal. The recent market drop followed U.S. President Donald Trump's confirmation that planned tariffs on Canada and Mexico would proceed. While this decision has sent shockwaves through global markets, Ting remains optimistic about crypto's long-term outlook. Crypto markets resilience. History repeats itself. Ting addressed investor concerns in a February 25 post on X, stating that crypto has historically bounced back stronger after macroeconomic disruptions. It's important to view this as a tactical retreat, not a reversal, Ting emphasized. Crypto has been here before and has come back even stronger. Bitcoin, BTC, dropped below $90,000 for the first time since November, following Trump's tariff announcement. The broader crypto market reacted swiftly, with panic selling pushing the crypto fear and greed index down to 21/100, marking extreme fear. The index had previously been at 29 to 100 just 2 days prior, highlighting the rapid sentiment shift. Another indicator, Nansen's risk barometer, turned risk off after holding a neutral rating since mid-November. This signals widespread uncertainty among institutional investors, many of whom await further clarity on trade policies before re-entering risk assets. Despite the sell-off, Tung remains bullish, pointing to historical trends where crypto markets react to macroeconomic conditions similarly to traditional assets but recover with greater resilience. ETF filings grow as fundamentals strengthen. Beyond short-term volatility, Ting highlights growing institutional demand for cryptocurrency investment products as a key indicator of long-term strength. Since Gary Gensler stepped down as SEC chair on January 20th, major asset managers have rushed to file for new crypto ETFs, including funds tied to XRP, Cardano, ADA, Solana, SOL, and Dogecoin, Doge. ETF approvals are generally considered a bullish signal, as they provide institutional investors with regulated avenues to gain exposure to digital assets. Ting believes the influx of ETF applications indicates increasing mainstream adoption and regulatory acceptance. Federal Reserve's cautious approach to rate cuts. Another key factor influencing market sentiment is the U.S. Federal Reserve's stance on interest rates. Many investors had anticipated aggressive rate cuts in 2024, which would have made crypto assets more attractive relative to bonds and traditional markets. However, the Fed has adopted a more cautious approach, leading to uncertainty in both equities and digital assets. Ting noted that while this policy shift has contributed to short-term market weakness, the fundamental indicators of crypto's strength are getting stronger. He encouraged traders to zoom out and focus on long-term adoption trends rather than short-term volatility. Will the crypto market recover or face more pain? With Bitcoin at multi-month lows, investor sentiment at extreme fear, and macroeconomic uncertainty looming, will crypto continue its downward spiral, or is this a golden opportunity for long-term accumulation? Bybit CEO declares war against Lazarus after $1.4 billion hack. Bybit takes aggressive action against North Korean hackers following historic crypto theft. In an unprecedented move, Bybit CEO Bin Jo has declared an all-out war against the notorious North Korean hacker group, Lazarus, after the exchange suffered a staggering $1.4 billion exploit. The February 21st attack marked the largest crypto heist in history, sending shockwaves through the digital asset industry and raising concerns about security vulnerabilities in centralized exchanges. A call to arms. Bounty program launched. On February 25th, Joe took to X, formerly Twitter, to mobilize the crypto community, urging them to support Bybit's fight against Lazarus. He announced the launch of a bounty program offering significant rewards to those who assist in intercepting stolen funds. According to Bybit's newly launched bounty website, individuals or firms that successfully freeze illegally moved assets will receive a 5% cut of the recovered funds, while those directly involved in intercepting stolen crypto could claim up to 10%, potentially amounting to a staggering $140 million. We have assigned a dedicated team to maintain and update this website. We will not stop until Lazarus and other bad actors in the industry are eliminated, Joe declared in his post. In the future, we will open it up to other victims of Lazarus as well. How the attack unfolded. Blockchain security analyst Zach XBD identified Lazarus as the perpetrator of the February 21st breach. The hackers siphoned more than $1.4 billion worth of assets, including liquid-staked Ether, SDTH, mantle-staked ETH, METH, and various ERC-20 tokens. Bybit swiftly responded by reassuring its users that all stolen assets had been replaced and that the platform's reserves remained at a 1-to-1 ratio. The exchange's ability to replenish the stolen funds speaks to its financial resilience, but it also raises concerns about the safety of user assets and the effectiveness of security measures across the industry. The incident has reignited debates on whether centralized exchanges should enhance their security frameworks or transition to a more decentralized model to mitigate such risks. Could Bybit become a target for future attacks? While offering a bounty for the retrieval of stolen funds is a standard industry practice, Joe's aggressive stance against Lazarus sets a new precedent. Historically, some firms have negotiated directly with hackers to recover stolen funds while avoiding legal entanglements. Bybit's decision to take a hardline approach may deter future attacks, but also positions the exchange as a high-profile target for cybercriminal organizations. Crypto hacks, a decreasing trend? Despite the severity of the Bybit hack, data suggests that the number of successful crypto breaches has been declining since 2022. According to blockchain security firm PeckShield, cybercriminals stole more than $3 billion in crypto-related attacks in 2024, with phishing schemes accounting for the majority of thefts. However, the total number of hacks and scams tapered off toward the end of 2024, signaling improved security measures and heightened industry awareness. That said, the Bybit incident serves as a stark reminder that even leading exchanges remain vulnerable to sophisticated attacks. It underscores the need for enhanced security protocols, greater regulatory oversight, and industry-wide collaboration to prevent future breaches. What's next? Will Bybit's bold move set a new standard for exchange security?